Welcome to the very first buy-to-let mortgage video blog on behalf of your property network. My name is Paul Rockett and I'm the Managing Director of Landlord Centre, who are buy-to-let mortgage specialists. Each month I shall be looking at various scenarios regarding buy-to-let and commercial mortgages and hopefully giving you an insight into what can be quite a complicated marketplace. For our first video blog, the question that has been posed is, how do you secure a mortgage on an HMO? In order to answer this question, I have included 4 further questions. The first of which is, what type of HMO have you got? A basic definition of an HMO, or house in multiple occupation, is a property occupied by persons of more than one household who share one or more basic amenities such as a kitchen or bathroom and whose main residence it is. The government states that an HMO needs to have 3 or more tenants. This covers a huge range of scenarios and needs to be broken down further. The government has also given each local housing authority permission to determine which HMOs it wishes to licence, which means that a property licensed in one area may not be licensed in another. There are 3 main types of licences: selective, additional and mandatory. But fortunately, most HMOs are not required to be licensed at all. It is the landlord's responsibility to determine whether a property needs to be licensed, and you can do that by contacting the local housing authority pertaining to the property in question. Each lender has its own views on HMOs, but most would not consider lending on any property that required a licence, such as TMW or BM Solutions. Only a few lenders would consider lending on a multi-unit licensed property, and as that is the most difficult scenario, that is the one I'm going to concentrate on most here. The second question is, what information does the lender require? In the case of a multi-unit licensed HMO, then this is looked at by the lender very much on a commercial basis, and as such will require a fair amount of paperwork and information to allow the lender to proceed. The most likely lender in this instance would be Paragon, and they will require you to be an experienced landlord and run your property letting as if it was a business. You will need to be able to provide them with 3 years accounts, a letting schedule, 3 months bank statements, as well as a copy of your licence to allow them to carry the case forwards. Paragon may very well request further information if the accounts or statements need explaining. Please note that if an application for a licence or planning permission is being applied for, then they will need to be in place before any monies can be drawn down. The third question is, what kind of mortgage can you get? As I mentioned, there is a limited choice of mortgages available for the multi-unit licensed HMO, and as of today it is unlikely that a fixed mortgage would be available, as they are more difficult for lenders to fund, although factors like that change on a day-to-day basis. Therefore, the most likely product available would be a variable rate. The rate to be charged may be as much as 0.5% above a regular buy-to-let mortgage. However, you may wish to check with a buy-to-let mortgage broker the current rates available today. Another factor that may determine whether a mortgage is suitable to you is the percentage of the value of the property that you're able to borrow, known as the loan to value. And the maximum loan to value we have available today is 75%. This brings us on nicely to the final question. How will your property be valued? This is possibly the hardest question to answer. Paragon are able to value a multi-unit licensed HMO in 2 ways. Firstly, is a bricks and mortar open market residential valuation, which would be sold through an estate agency, or a security investment valuation. This valuation will incorporate the value of the lettings income from the multiple units and be more of a business valuation. The valuation is generally more advantageous for you. The decision, however, as to which valuation to use lies with the lender's underwriters and surveyors, and is made on a case-by-case basis. So therefore you must make sure that you have their decision before you submit a full application, particularly if a security investment valuation is required to get the level of borrowing needed. So, in conclusion, there are many types of HMO, licensed or not, multiple tenancy agreements or not, but all can be accommodated subject to the lender's final underwriting decision. Landlord Centre provides your property network subscribers with access to a free online quotation system where you can obtain instant quotes, as well as access to a telephone support team where you can discuss your specific requirements and hopefully find a solution for your needs. Don't forget, all this is free, so go and have a look, I hope you found our first video blog helpful, and thank you for watching.